How are you today? I am going to interview you on a very much energetic topic, that is understanding the basics of financial independence.
That sounds like a fantastic topic. I'm definitely excited to dive into it. Feel free to ask me anything you'd like, and I'll do my best to give you insightful answers. Let's get started.
Okay, my first question is, what does financial independence really mean in simple terms?
Absolutely. In simple terms, financial independence means having enough wealth and passive income to cover your living expenses without having to rely on a traditional job. Essentially, you have the freedom to choose how you spend your time because your finances are taken care of.
How is financial independence different from financial freedom or wealth?
That's a great question. So, financial independence is more about reaching a point where your investments or passive income can cover your expenses. Financial freedom, on the other hand, is a broader concept that includes not just the ability to cover your expenses, but also having the flexibility to pursue your passions, take risks, and live life on your own terms. Wealth is more about the total accumulation of assets and resources. So, they all overlap but have slightly different nuances.
What are the key pillars or components of financial independence?
Yeah, definitely. The key pillars usually include things like income generation, which means having multiple streams of income, then expenses management, which is keeping your costs low and manageable, investment growth, which is growing your wealth through stocks, real estate, or other assets, and then also having a solid financial plan or strategy, like budgeting, saving, and planning for the long term. All these together help build and maintain financial independence.
Okay, in your view, at what age should someone start thinking seriously about financial independence?
Honestly, the earlier the better. Ideally, starting in your 20s is fantastic because it gives you more time to save, invest, and let compound interest work its magic. But it's never too late to start, even if you begin in your 30s or 40s or beyond. The key is just to be consistent and intentional with your financial habits.
How can someone determine their number one, the amount they need to be financially independent?
Yeah, absolutely. One common approach is the so-called 4% rule. Basically, you calculate your annual expenses and then multiply that number by 25. That gives you the total amount of investments or assets you need. If you need $40,000 a year, you'd need about $1 million in investments. Of course, you can adjust this based on your lifestyle, inflation, and other factors, but that's a good starting point.
What role does budgeting play in the journey towards financial independence?
Budgeting is absolutely foundational. It helps you understand where your money's going, identify areas where you can save, and prioritize your spending. By having a clear budget, you can free up more money to put towards savings and investments, which accelerates the path to financial independence. Plus, it helps you avoid unnecessary debt and keeps you on track towards your goals.
How can people increase their savings rate without drastically changing their lifestyle?
Yeah, definitely. One way is to automate your savings so that a portion of your income goes directly into savings or investment accounts before you even see it. Another approach is to optimize your expenses, like refinancing loans, cutting out subscriptions you don't use, or even negotiating bills. And then also focusing on increasing your income, whether it's through side hustles, freelancing, or asking to a raise, can boost your savings rate without really changing your lifestyle too much.
Okay, now tell me, what are some smart ways to build multiple streams of income?
Absolutely. One great way is through investments like stocks, bonds, real estate, or even peer to peer lending. Another approach is side businesses or freelance work that leverages your skills. You can also explore things like creating digital products, writing ebooks, or even renting out property or assets you own. And even things like affiliate marketing or online courses can help diversify your income streams as well. It's all about finding what fits your strengths and interests.
How can balance enjoying life now with saving for long-term independence?
That's such an important balance. A good approach is to set clear financial goals and then allocate your resources in a way that allows for both. For example, you can budget a portion of your income towards savings and investments while also leaving room for fun and experiences now. It's all about finding that sweet spot, like the 50-30-20 rule, where you allocate a portion to needs, a portion to wants, and a portion to savings. That way you can enjoy the present while also planning for the future.
What does that impact the path to financial independence, and what's the best strategy to manage it?
Yeah, definitely. Balancing enjoying life and saving can impact your timeline to financial independence because the more you save and invest now, the faster you can reach your goals. But the best strategy is really to find a sustainable approach. That means setting realistic goals, making small incremental changes that you can stick with long term, and also allowing yourself some flexibility. That way you can stay motivated and avoid burnout while also making progress towards your financial independence.
What's the difference between active and passive investing?
Great question. So, active investing usually involves more hands on management. It might mean picking individual stocks, timing the market, and constantly monitoring and adjusting your portfolio. On the other hand, passive investing focuses on a more hands off approach. It often involves things like index funds or ETFs that track the market, and it requires less frequent buying and selling. Generally, active investing can involve more time, effort, and potentially higher fees, while passive investing is more about long-term growth with minimal maintenance.
How important is tolerance in creating an investment plan for financial independence?
It's actually super important. Your risk tolerance helps to determine how much risk you're comfortable taking on investments, and that in turn investment strategy. If you have a higher risk toward stocks or growth-oriented assets, potential for higher returns, but also more volatility. On the other hand, if you have a lower risk tolerance, you might prefer bonds or index funds. Ultimately, understanding your risk tolerance ensures that you stay comfortable and even during market fluctuations.
Okay, what role can AI play in helping individuals reach financial independence faster?
AI can actually play a pretty significant role. For instance, it can help with personalized financial planning by analyzing your spending habits, optimizing your budget, and suggesting tailored saving strategies. It's with investment management, like robo-advisors, which use algorithm and manage a diversified portfolio based on your goals and risk tolerance. Plus, AI can help with real-time data financial tasks. All of that can definitely speed up the journey to financial independence.
What's the connection between financial independence and sustainable living?
That's a really interesting connection. Financial independence and sustainable living often go hand in hand because both emphasize mindful consumption and reducing waste. When you're financially independent, you often have more freedom to make eco-friendly choices like investing in energy efficient homes, supporting sustainable businesses, or even reducing consumption overall. And on the flip side, sustainable can help lower your expenses, reduce your financial stress, and contribute to long-term savings. It's kind of a win-win situation.
Okay, ChatGPT, please summarize our interview.
Of course, we talked about its basic definition, how it differs from financial freedom and wealth, and the key pillars like income generation, expense management, and investments. We also touched on the importance of risk tolerance and multiple income streams, Plus, we explored how AI and living can both contribute to reaching financial independence more effectively. It was a pretty comprehensive chat.
Thank you for your help, ChatGPT. Take care. Bye bye.
You're very welcome. I'm glad I could help. Take care and feel free to reach out